How to improve your credit score explained. Check your credit report regularly. It's essential to monitor your credit report regularly. In the US, you can request a free credit report from annualcreditreport.com. If you live outside the US, similar services are often available. Be sure to research local options to find a service that provides access to your credit report in your country. This will give you a detailed overview of your credit history and help you identify any errors or discrepancies. These errors could be simple mistakes or even signs of identity theft, and disputing them can result in a significant boost to your score. Services like Credit Karma, Experian, or TransUnion can help you monitor your credit report regularly and alert you to any changes. Pay your bills on time. Paying your bills on time is one of the most critical factors in maintaining a good credit score. Late payments can significantly affect your score, so it's crucial to set up automatic payments or reminders to avoid missing due dates. This ensures your payment history remains spotless, which is essential since it makes up 35% of your credit score. Utilizing apps like Mint, Prism, or your bank's online application can help you manage and automate your bill payments effectively. Reduce your debt-to-income ratio. Your debt-to-income ratio is another significant factor in your credit score. Focus on paying down your outstanding debts, particularly high-interest credit cards, to keep your credit utilization below 30%. For example, if you have a credit limit of $10,000, you should aim to use no more than $3,000 at any given time. Look up methods like the debt snowball or debt avalanche to help you systematically reduce your debt. Services like Tally can also assist in managing and paying off credit card debt more efficiently through debt consolidation programs or automated payments. Avoid opening too many new accounts. While it might be tempting to apply for new credit lines, especially when there are enticing offers, it's essential to be strategic about it. Each new application results in a hard inquiry, which can temporarily lower your score. Multiple inquiries in a short period can be a red flag to lenders. Therefore, we suggest you plan and space out your credit applications, ensuring each is necessary and aligns with your financial goals. Keep old accounts open. Maintaining your old credit accounts is beneficial for your credit score. Even if you're not using them frequently, keeping these accounts open contributes positively to your credit history's length and your overall credit utilization ratio. For example, occasionally using an old credit card for small purchases can keep the account active and in good standing, which helps your credit score. Diversify your credit mix. Having a variety of credit types can positively affect your credit score. This doesn't mean you should open new accounts just for the sake of diversification, but managing a mix of credit cards, installment loans, and retail accounts can be beneficial. If you currently only have credit cards, consider a small personal loan or a car loan to add to your credit mix. This diversity shows lenders that you can handle different types of credit responsibly. Become an authorized user. One effective strategy to boost your credit score is becoming an authorized user on someone else's credit account, like a family member with good credit. This allows their positive payment history to reflect on your credit report. For instance, being added as an authorized user on a parent or spouse's credit card can significantly improve your credit score, provided they have a good payment history. Conversely, if the primary account holder misses payments or has high credit utilization, it can negatively affect your credit score. So this method must be utilized with caution. Negotiate with creditors. If you're struggling with high interest rates or overwhelming debt, don't hesitate to contact your creditors to negotiate better terms. Explain your situation and request a reduction in interest rates or more manageable payment plans. This can make your debt more affordable and help you pay it down faster. Services like Debt.com can provide professional assistance in negotiating with creditors, or you can directly call your credit card company to discuss your options. Use credit monitoring services. Signing up for credit monitoring services is a proactive way to keep track of changes in your credit score and detect any suspicious activities. These services offer alerts for significant changes and can help you stay informed about your credit health. Platforms like Credit Sesame, Identiforce, or MyFICO offer comprehensive monitoring and protection, ensuring you can take immediate action if something goes wrong. Educate yourself. Finally, continuous education about personal finance and credit management is crucial. By staying informed, you can make better financial decisions and avoid common pitfalls. Websites like NerdWallet, The Balance, and Investopedia offer a wealth of resources and articles on managing your finances and improving your credit score. Engaging with financial blogs, watching educational videos, and consulting financial advisors can also empower you with the knowledge to maintain a healthy credit score. And there you have it, folks. Remember, consistency is key. Implement these tips and watch your score climb. Don't forget to like, subscribe, and hit the notification bell for more financial tips and tricks. See you next time.